As you can see here behind me, we've got the micro crude oil futures up, and as you can tell, it's a bit high. It seems the day opened up, or the futures opened up with oil over $101 a barrel. So we would anticipate that the S&P 500 is also down. Some of the news coming in over the weekend, we're going to pull that up real fast. So as you can tell, this is a new setup, so thank you for bearing with me. This is I think this is a little bit better for the overall feel that I'm trying to put out. But as you can see, we're still getting used to it. It's still a little bit rudimentary, but now I've got screens up here. The visual is better for you there, and I'm pretty sure we got a good audio off of this. I'm just going to tighten up the gain a tad, just in case. All right. Okay, now let's take a look over here at the S&P 500. Boop, 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 boop. Bada bing. Here we go. All right. So as you can see, I'm using Robinhood Legend. It's my favorite platform to trade on. And it's done me very well over the last few years. Now it's pretty brand new as far as trading platforms go. So it does take a little bit to get used to if you're used to other trading platforms, but I'm not. I don't have any other ones. So this is by far the best one for me. On local news over the weekend, we're still getting a lot of community kokua to fix and mend all of the flood damaged areas. There's a lot of them, and they're all in the low-lying areas. So mahalo for all the people who are kokuing for that. Also, we are seeing high gas prices. They're spiking up again. So as you can see on the crude oil chart we had earlier, the gas prices here will also see a reflection of that. I put gas yesterday, and it was $5.69 a gallon for regular, which is not god awful. It was like that the last time I put gas. So I've seen it spike to $6 a gallon, which can be a little bit hard for people if they drive a lot. Personally, I don't, because you can see I work here from home, so I don't have to drive, so it doesn't hurt my wallet too much. But I feel for the people who do. So I'm going to do my best to try to bring some calm to the waters, bring some overall war outlook. I don't like to use the term war, but it's sort of what's happening. The oil prices are spiking. Conflict is not de-escalating quite yet, but we'll get into that in a little bit. Also, because of all this, the overall macro is still being squashed, right? There's not really a way for us to get out of this, per se, without some massive de-escalation. Now we're looking at the S&P 500. Oh, excuse me, that's the SPY. Let's look at the futures. The SPY's not open yet. Here we go. All right. So that's the SPY. All right. So if you guys were following along already, you know that we're kind of in our green box area. I'll pull it back. I'll pull it up on the background. Scale this. So it doesn't look like the S&P 500's opening green quite yet. So we didn't get a surprise pump or some sort of tweet or post that changed the trajectory of the market. Welcome to all the couple people who are watching. I really appreciate you tuning in. Give me 1 second. Bearing with me for a second. Thank you for tuning in again. For people tuning in, if you have any questions, I'll get to them after the chat or after the pod as soon as I can. Most likely I won't, so I'm just going to continue on. As you can tell here, let's see if it's in the right perspective for everybody back here. Yeah, okay. So I'm going to zoom out a bit here on this chart just so you can kind of see what's happening on a longer scale. Let's give it 4 hours, I guess. So we're still inside of this box, right? We're getting inside of this kind of critical area down here, which we've been watching for a couple of weeks now. And because of that, we're now seeing a lot more opportunity. Um, let's get this out a little farther so you can cut a bigger macro. For anybody tuning in who's new to this, I've been covering the S&P 500 and the overall oil crisis the last probably 2 or 3 weeks since it sort of started. Um, Unfortunately, it's going to be the overall theme for our live pods for at least another few weeks. I'm anticipating maybe 3 or 4 weeks before we see some decent sized de-escalation. We're getting news that or that the U.S. is putting troops on the ground, and that's going to be tough for the next couple of weeks. I don't like that. That's not going to be good for the markets. So looking towards this upcoming week, and as the futures open, I don't see it being pretty tomorrow. As the futures have been open, 45 minutes maybe at this point, at the very most. I'm not quite sure on the time at the moment, but we're gonna zoom out, zoom out, zoom out, zoom out, zoom out. Okay, there we go. Perfect. So as you can see up there, there's my trend channel. And that trend channel is having a very violent time. So as you can see, I drew some trend lines here. And it's broken those trend lines, right? So I'm going to have to reassess where this goes from now. Because, I mean, the trajectory is just way too violent. Oh, we need that. We'll lock you in spot. All right. So the trend channel is pretty easy. I was pretty conservative. I thought we'd get a less violent fall, but I was mistaken. And that happens because this is kind of predicting the future here, right? So it's pretty much broken, as you can tell from this point. So I'm not quite sure the amount of de-escalation we would need to actually turn this around. It would be kind of tough at the moment to get literally anything on a day to day that could change this. Um, I'm seeing also reports that we will be having troops on the ground, like I said earlier, and they will be there for weeks. I mean, we're seeing also large institutions starting to move their money, and that money is starting to go towards most likely energy. Also, trying to hedge themselves. They're pulling money out of a lot of different uh, sectors. As far as the Mag 7 is taking a bit of a hit. The S&P 500 is down 4% or more, maybe 5 or 6 at this point on the year. So that trickles down to literally everybody who's investing. Now, if you are a bear, you're doing great. Congratulations if you're naturally bearish on the market. Personally, I tend to short or put a short position in to hedge. I'm more optimistic, honestly. You got to be really doing something absolutely terrible for me to start actively just shorting you. And I haven't had to do that yet. There's a couple of local stocks that I short because I know my local economy better than I do any other economy. So I want to always trade what I know. All right, so let's go over some of the updates over the weekend. We'll start with what came in earlier today. All right, so the S&P 500 is down a little more than 0.5%. Nasdaq down about 0.8%. The Dow Jones about the same, 0.8%. Crude oil futures up 3%, and natural gas is down 7%, which is interesting because of the amount of conflict that's going on in that area, you'd figure natural gas would get a pump as well. Qatar closed off their LNG producing plants during this conflict. It's just really hairy. There are two straits as well. We tend to cover more of the Strait of Hormuz. Then we also have a strait. If you look at the map, basically to the left, it's the Strait of. I'm not going to pronounce it because it's far too difficult. But I am learning how to pronounce Middle Eastern languages a little bit better. If you were here in my first pod, I was not doing great as far as pronouncing some of the Middle Eastern words, but I'm getting a little bit better. As we said earlier, crude oil is now up to, it spiked as the futures opened to $103 a barrel. So it was 101 or 100 when it closed Friday. So it increased by 3%, which is not going to be good for the overall wallet. As we know, crude oil is not just oil, it is also gas. It is also gas to power plants. And that amount of energy that's getting disrupted tends to trickle down into individual people's wallets. Now, that's not great. And it's not good for us here in Hawaii because we are pretty much subservient to that type of energy source. We have a lot of solar, of course, because we have lots of sun, but our main primary source is still diesel generators. And that becomes a little bit more unfortunate if we haven't hedged in some way, because it's going to trickle down to the overall consumer. And the overall consumer, maybe most of us can handle it for a little while, but in the short term, it's the people who don't have a lot of money who can't handle more of this pop and increase, because it's not like their income is also going to pop as well to fulfill that difference. So it's important that we stay at least level headed, because this will change. This will turn around. If you're here on Friday, we talked about the the bond market and how the bond market is just flashing, flashing, flashing. It's just far too high, the yield at this point, to be sustainable or affordable for our economy in the U.S. We could be seeing mortgage rates going up over 7% uh, within the next couple weeks, or even sooner than that. I try to be a little bit more optimistic. I want things to turn around, but at this point, I don't think it will. And as you can see on the futures chart behind me for the S&P 500, we're going to have to start turning around our trades, or at least aggressively hedging more. Like, I was a little bit more optimistic than I should have been, and I think we're going to have to actually just go with the tide. Uh, if you live here in Hawaii and you're tuning in, we know you don't fight the ocean. This is sort of like the ocean. If you don't know what the S&P 500 is, it's a basket of the top 500 companies in the U.S. And the U.S. is the biggest global economy, right? So it's U.S. and then that affects the overall global economy. So this is a good metric to kind of see how the overall global sentiment is. If people are hurting, if people are not hurting, if they're thriving, this is a good place to start. Now, this is a day chart. If you were to, we can extend this out. Um, it's not bad over time, right? We're up still from a year ago, but it doesn't mean that we're not going to come down and correct, because we've been due for a correction for a while. If you follow the stock market, and you have been for years, you know that corrections happen, and that's 10% or more. So the Nasdaq is already sort of in correction territory. The gold, gold and silver sort of hit that kind of correction territory. Uh, it was just too violent too quickly, and from what I can tell, the war has sort of pushed people into different safe haven um, stocks or equities or assets. No, historically, people would move towards gold or silver during war. Um, it just war did it. People didn't really do that. They funneled money towards other things. They pulled out of gold because gold was so high, um, to just kind of take their profits, right? So because it ran up so high and then the war started, people were like, nope, cut the line, right? We're going to take our profits here because that's what happens, right? It comes down. As you can see in the chart here, things don't trade just up, right? Or down. It just kind of, it has this motion to it. So we can also find those areas of opportunity. Like I stressed out back when this chart was somewhere up there, this market is an opportunistic market. For people who are already invested, it's a little bit on the painful side. But as you can tell, I'm not crying in my beer about it because it'll turn around. I'm always looking for the next opportunity for an asymmetric play. of a sort, right? Like I'm buying something cheap because of the amount of violence that we saw. Like you can see that the overall S&P 500 actually came up nice and high and then rounded off and then plunged down. So usually it kind of comes up pretty steady and it comes down pretty steady. So because of this amount of violence and the amount of volatility that spiked it down, we're going to get a similar amount of volatility to push it back up. Now, I'm not saying that's going to be tomorrow or this coming week because we got to think about what's squashing this down. And it's the overall macro economics of the market. And due to the fact that oil and energy costs affect literally everything, everything you can think of is affected by this oil crisis. We're seeing countries running out of oil. We're seeing spikes in like California, for instance, that are over $8 for a gallon of gas. And I'm no politician. I'm not quite sure the type of policies you can put in place short term, but I've seen what our leaders have done during hurricane season, and they can restrict people from putting the prices too high on certain goods. Right? It's like gouging. So I'm not quite sure why we can't do that for our people too. Just gas companies make money no matter what. So I'm sure they could take a hit, and then of course our local government should give them some sort of tax break on that. It's like, okay, you bring your gas prices down for X amount of time to help alleviate the stress for that short term, and then because of that, we'll give you X amount of tax break for this year. Right? You always got to try to make a deal out of this. It's like I understand that most economies, all of them, are run by people somewhere, even if it's a lot of computers. Someone's got to go plug in those computers. Someone's got to go dust off those fans. Someone's got to turn on the lights, right? It's not going to be all computer driven one day. So there are people involved, and I feel for them. But I want to think about the overall numbers of it all. Uh, and short term, this sucks. Long term, if you're not invested quite yet, this is the time to start looking. This is the time to start sort of hunting for your your cheap stocks. The stuff that you love or that you haven't invested in that you're going to fall in love with are cheap for no good reason. Like it's not like the companies that you are falling in love with are down or they're doing poorly. It's got to do mostly with the fact that the overall economy is squishing or increasing their costs, right? Costs on energy, costs on transport of their goods, even if it's across the internet, even if it's just information you're traveling. That's all going to come down to oil still. And until we can change that, it's what's going to happen. Uh, I know President Trump wants a strong economy, cheaper goods, cheaper energy. This war achieves zero of those things. So because of that, we're going to see some radical de-escalation, or at least some effort to radically de-escalate this, because $101 on the crude oil is far too high. It's like that's unsustainable. I want this to come down soon for everybody. I was speaking with people yesterday while I was in the salon, and we're hearing about people contemplating buying new vehicles or buying smaller vehicles because of the strain on their budget because they drive trucks on the Big Island or Hawaii Island or Mokuoku Abe, right? However you want to go with it. A lot of trucks are used here, right? We're a rural area. As advanced as we get, technology wise, we're still a rural island. There's still lots of spans of open land that we need trucks to traverse. So that hurts us a lot. It's not to say that we are broke or poor, but it's straining a lot of the lower income families because service workers and lower income families tend to work in harder labor jobs. That's just how it goes, right? Not everybody owns a business where they can be like, oh well, that's fine, I'm okay, and then just lay off some employees, right? It's those employees that I worry about because those are the people that are moving our goods from Kauai High to Hilo and back and forth, right? So those are the people that I'm worried that are affected the most by this overall crisis locally. And then we got the storm that affected a lot of the low-lying areas, which affects our two main income sources, which is service workers who work the tourism, as well as high income areas of the island tend to be coastal, right? Rich people love looking at the ocean for some reason. Uh, Us locals, the longer you live in Hawaii, the more likely you're going to be up in the mountains because it's important that, or we know it's important that we work and we provide from the ocean, but we can't live there. The ocean always takes back the land, right? There's a lot of examples throughout the South Pacific of how it used to be an island and now it's an atoll. So we cannot keep our most expensive assets near the ocean because we know it's going to come for it, right? So because it's so costly to move it, people don't want to admit that it's something that we have to start doing, right? We got to start moving things back up from the ocean. This storm showed how much the water can get underneath the roads. Uh, I'm from Maui, so South Kihei took a pretty large hit from this storm. The flooding and the water got under the roads, and South Kihei Road started to just fall under the ocean. And you can kind of see that there was a lot of sand down there. And it's I know in the good days that you can sort of build on sand, but on the bad days, you don't necessarily want to build on sand. So it's important that we do that for our investing portfolios and we do it for our actual assets, like strong assets. If you can, when you invest in real estate, try to find strong land. The house will eventually degrade depending on how long you have this property, but at least you know the land itself is strong enough to support another building or expansion. But if you buy, like, let's say a condo and it's attached to a bunch of other condos and that condo is on like a cliffside, right now it's good. But then if you're trying to provide or pass this down to your grandchildren, that may not be sustainable. So when we look at our investments, we have to look long term, super long term, so long that you will never be able to sit under the shade of that tree you planted. And that's the sort of outlook we want. And these kind of opportunities in the market don't come very often. On a statistical standpoint, midterm years politically tend to be a little bit hard on the markets. That's just how it goes. It doesn't really matter who is in office on either side. Midterm years tend to be good opportunistic years for people who are not invested in the market quite yet. So I'm really excited for the people who are just starting out right now, who might just be tuning in to be like, hey, maybe I can do this. I got a couple bucks. Maybe I can start a journey here, turn that couple bucks into a couple more bucks, and then it compounds. So we know about the seven wonders of Earth, but the eighth wonder is definitely compounding. Like if you can compound your money or you compound your assets, that's how you exponentially grow, right? Because you took something small and you took that profits from that small thing and you grew that initial nugget, and now it just grows exponentially together. So the more you can kind of ignore the noise, ignore the overall problems, the stress, the short-term stress that you're dealing with, the more likely you'll get a strong asymmetric gain in the short term, which will give you just a lot more motivation to stay invested. Now, truthfully, uh, and this is something Peter Lynch said, if you're not willing to take at least a 50% paper loss on that stock, then you're not thinking about how to invest, how investors think. We know things take a hit. I'm a pretty large holder of Robinhood shares. Obviously, I love them, right? And Robinhood, the stock has come down from maybe 50% all time high, somewhere in the 150 ranges, down to where we are at somewhere about $65. And because of this overall downtrend, and it's not like we're going to correct anytime soon. We're going to see that trickle down into our overall portfolios. Now, this is a large metric of a big group or a big basket of companies. If you're an individual stock picker, um, those take a bigger percentage hit or gain than this does. So if this is not doing bad, what you own is probably doing a bit worse, and that's okay. It takes time to redesign your psychological thought process on investing. Because at first it takes a little bit of stomach to deal with you being wrong. And I've been wrong so often that it really doesn't matter anymore. Because I know I only bought a little bit. Like I don't buy a bunch anymore, and then I'm wrong by a lot. I I sort of just tease the market. Right? It's like you buy a couple shares, and you're like, watch, this is just gonna fall out of the sky, and then boom, it does. But sometimes you're like, it's gonna fall out of the sky, and then it goes, and you're like, whoa, did I find the right time for once? Sometimes that happens, but it's not about trying to time the market. It's about how long you can stay invested in the market while it's bad, while it hurts. If you know anything about history or even just lived at all to end up here on this podcast with me, you know that bad things happen. So I'm in my mid, little over mid 30s. So I've dealt with Y2K. I've dealt with 9/11. I've dealt with the subprime loan crisis back in 2008. That's when I graduated high school. Uh, I dealt with COVID so far, and now we're dealing with something like this. So if you're a millennial, you're not surprised by any of this sort of pain. So if you're not invested as a millennial, I don't know what you're doing with all of that resilience because this is a good place to put it. All that resilience was built in, and now you know when there's something else that hits the fan, you're like, meh, let's buy something then. Just close your eyes and honestly, you can throw a dart at the S&P 500 and something will turn around at some point this year on that index. If you're kind of a micro cap picker, you look for penny stocks. This is a good time too. But always keep your peripherals on the broader market because of the broader market affecting what you already own. You don't want to jump the gun by accident. Like this chart is very, very sharp, right? It came up slow, couldn't break a range, and then poof. So what we like to call what that's commonly called is a falling knife. And if you know anything about falling knives, whether it's physical or metaphysical, you don't catch them. You wait. So if you're looking to buy something, wait till it's sort of stabilized like it did here in this box. So this box here, you can see it sort of stabilized and kind of traded up and down, up and down, up and down. What we want that sort of thing somewhere after this violence, right? We want it to trade up and down, up and down, up and down, because now we know that that's sort of a resistance area that the trillions of dollars in the world it just doesn't want to go lower. That's it. That's the floor for now. Boom. That's a great opportunity to start kind of one at a time. Boom. As it goes. Because it's going to spike, drop, spike, drop, spike, drop. As you can see here, it happened already, right? Spike, drop, spike, drop, spike, drop. So if you know that it's up more than it should be, then you just wait for a second, or that's when you take some profits. Especially if you gained a lot in a short amount of time. You can let it run fine, but maybe take a little bit as it runs up, right? 10%. Let's say every dollar your stock goes up, maybe you shave 10%, depending on the size. Or maybe if it's something that moves a lot up and down, maybe every 15% take some, or every $3 take 10% off. Because this is not a game. A lot of people want to assume this is a game, and it's not a game. What it is investment. And the sooner you can get to a point where it's boring and you're just like almost searching for something more exciting, then that's when you stop and you keep it boring. The longer you can keep your investment boring, the more likely it's going to grow steadily. And if you can just stomach whatever type of volatility your portfolio has, then it's easier to make money. When you care about it too much, it tends not to go in your direction, at least in the stock market and investing from my standpoint. But the second I'm like, all right, just put you on the side, and they'll just let you cook. And then you come back in a little while and you're like, dang, I'm glad I didn't touch you because it just went uninhibited. It did went down and went up, but I never saw it. All right. So the faster you can get something invested and out of your face, but just sort of keeping overall gauge of the bigger picture, then you know that if this is down, then your stuff is a little bit down more. If this is up, then your stuff is most likely up more. And that's what we're looking for is opportunities to get yourself invested in the market so you can grow together. All right, let's take a look at some other things now. Uh, I want to bring up, let's see how the oil futures are because it's so violent. It's going to probably retract for a bit. So let's see where the microcrude oil futures are at the moment. Okay, perfect. So if you don't know what this is the Fibonacci retracement chart or lines, and I had them up on the highest point that we peaked out at, which was about $120, and then I put it down towards the lowest that we had right after that, which was 77.25. So that distance was big gap, but it was over a short amount of time. And because of that, if you get a short amount of time spike, you're most likely going to retrace. And you can see on the chart here on the top that it retraced and then went back up. And now it's going to kind of stabilize in that 100 to 103 range, right? Kind of between 86 and 103. So most likely it'll continue to trade inside of that trend channel until we get some massive de-escalation. We spiked today. Just going to give it a quick, yeah, okay. We're going to check where it is at the moment on the hour. Because we're only about 1 hour into the futures, and it's, oh, shizzle. It's up over $104 a barrel on the future chart. So that's not boding well for de-escalation talks. We as news watchers cannot guarantee anything we see. We can only go with the news that comes in and hope for the best that that news is as accurate and up to date as possible. I tend to use TKL for my up to date. The It's the Kobayashi letter. I think I'm pronouncing that wrong. No, I think it is. I haven't actually heard it pronounced, so forgive me if I'm pronouncing it wrong. But that's a great up to date place to find your your newest up to date information. Like I will find something that's gone come out like minutes ago, and I will let's see what we got. All right, so as of 3 minutes ago, in another sudden turn of events, the U.S. is allowing a Russian tanker full of crude oil to reach Cuba, per the New York Times. The details include the tanker is carrying an estimated 730,000 barrels of oil and is owned by the Russian government. This is expected to temporarily reduce the pressure on Cuban government facing the looming economic collapse. The Trump administration has been enforcing what amounted to an oil blockade around Cuba since January. It is unclear why the White House has now decided to let Russia bring oil to Cuba. On Friday, President Trump said Cuba is next after Iran. It becomes more astonishingly clear how easy it has been for President Trump to change the trajectory of the markets. For good or for bad, I personally cannot change the fact that this happens or if it does happen or not. I'm trying to ride this ocean. So I don't care. Long term, this will change. Short term, it's going to hurt. That's how crises go. Uh, let's see what else we got here. Okay, so for a split second, oil prices spiked to $115 a barrel. As you can see on the chart here, it got to 120 or so and ripped back down pretty exponentially so. So if it's spiking like this, I expect to get some radical de-escalation over the next 24 hours, or even within the next few hours. We don't know that yet. Let's see. We got another almost an hour or so till the overall 24 markets open up, and it doesn't seem like it's going to change. We'll check back to the S&P. I think we're going to stay inside that box. So if you give me a moment here, I'm going to extend this bigger chart here so you can kind of see what box I keep referring to. Zoom, 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 zoom. Okay. As you can see, I drew a green box up there. And that green box I drew a few weeks back. Now we're getting into that box a lot faster than I thought we were going to. As you can see, I drew a trend channel up there, and it is definitely broken out of it. Now it may retract back into it, like I may have just gauged an average by accident, but what I was actually looking for was the upper and lower bands. And I'm trying to guess. This is all sort of research and guessing. And it doesn't look like we're going to turn around. And if we do, it's going to be back up to that sort of white line and then back into that green box. But if you're following me a few weeks ago, that green box is sort of our eyes open, opportunistic box, right? Because if that is down, then what you're looking for is also down as well. Now, like I said, these companies are still doing perfectly fine sometimes. If it's being squashed down by the market, then it's just an opportunity to grab something you like. All right, so on a more positive standpoint, let's find some. Here we go. Let's bring up Robinhood Ventures Fund. Now this hasn't opened yet. The 24-hour markets are not opened yet. But what I'm just bringing up is the Robinhood Ventures Fund, and we're just going to scale this chart. Excuse that. Here we go. So if you don't know what the Robinhood Ventures Fund is, it's a pre-IPO basket of some of the top 10 companies of 2026. From Databricks to Revolt to Ramp, Sonic Boom, and a few others in there. And this is an opportunity for people who can't really get into the private equities market or the private companies market. Excuse me, not private equity. It's the same thing. So usually you have to go public before a company can be picked up by the obvious public. But there are opportunities sometimes for people who have high wealth to get into these companies before they hit the market. Because once they hit the market, boom, you got an influx of money. Databricks is in this fund, and they're going to probably IPO within the next 12 to 24 months, maybe less. And they're evaluated at 120 billion or more. So once they go into market, poof, all of a sudden what you own is exponentially worth more because more people are now invited to buy it who are restricted from buying it because it wasn't public. So this is a good opportunity if you're looking for something that's brand new and cutting edge. Now, in the long-term portfolios, this is an opportunity for, let's say, something like Microsoft. Like everybody knows what Microsoft is, right? Let's have this chart pop up real fast for you. Awesome. And we're going to extend these candles out a bit so you can kind of see the overall trend. Maybe a little bit longer. We'll give it about a week. So if you don't know Microsoft, I'm not sure why you wouldn't know Microsoft, because if you have a computer, you know what Microsoft is. And if you're looking for opportunities in tech, this is a strong opportunity for at least consideration. Because you can see here, I'm going to extend this out. That red line, it has not broken that red line for about a decade. 2019 to now. So this is the first time it's actually broken that trend line. And if you're looking for an investment in tech, that's what we look for as an investor. We look for something like that. It broke all of the moving averages because it'll revert to its means. That's just how it goes. Math tends to do that, right? You get something violent and it comes back. Things follow a rhythm. If you like to think about it like a heartbeat, it follows a rhythm. And then sometimes it spikes and it comes back to that rhythm, spikes, comes back to that rhythm, right? Fast heartbeat, come down, slow heartbeat, come up. So it's the same thing when you look at this kind of chart. So it's now coming down and then it'll revert back to its intrinsic rhythm. We hold a lot of tech already, so I'm not looking for an opportunity, but I wanted to share what a good opportunity looks like on a good company. If you want to look down the road for other types of stocks or use this as an example, this is what we look for is, hey, look, it's way cheaper than it should be. It is valued up here and the stock price is down here. So now you have a bit of a gap that you can fill, and that's a short-term opportunity or even a long-term one. Especially with Microsoft, it tends to trade above its averages. So it's one of the few times it hasn't. It might be a good time to consider looking at it or looking at other types of stocks that look sort of like that, right? When I was posting and looking at different types of, or putting out questions because I have questions just like you guys, and I put it out to my friends on X, and then they gave me responses. I got a response, what is the moving averages? And I was like, oh yeah, duh. Like you got to check that first. Why didn't I look at that first? And then it was like, what I was looking at was trading way above it. And I'm like, because it'll bring itself back to those, like I said, they're called averages for a reason. Okay, let's see what else we got. Um, if you were following or drink Celsius at all, uh, Celsius took a bit of a kneecap slap because Costco introduced their own version of a Celsius drink, and sparkling energy drink. I'm seeing mixed flavor responses from people who have tried it. I don't drink Celsius because it necessarily tastes the best. I drink Celsius because it doesn't taste the worst first thing in the morning, right? Because you're used to something like orange juice in the morning. But then when you drink like a Monster or Red Bull, those kind of have their own flavor profiles. So if you can get, I like it because it tastes sort of like breakfast. But if you are invested in Celsius at all, I'm going to reduce the size of this one. You know that this week was not a great week for Celsius because when Costco introduces something, it tends to kneecap what it's competing against, at least short term. And this is a good way to see how strong the moat is. Now, I'm so sorry for anybody who is invested in Celsius. You may trade lower for a little while. And if you don't know what a moat like around a castle, right? Depending on the width of that moat, is how hard it is for your enemies to intrude your castle. So Celsius has a very thin moat. And because of that, they cannot defend against competition as easily as, well, we'll just use Costco. Costco, huge moat. Their moat is so huge that they lose about 240% on every hot dog and drink combo that you buy. No joke. Like that's how much money they lose, and it's baked in, and it will only lose more. But because of how strong their company is, and they know that their customers are the most important thing, not only for buying and selling, obviously, but also for data collecting. So when Costco brings in a product like Celsius, for instance, they also are now in charge of watching how that product moves, right? Because if it doesn't move a lot, they need to bring in less the next shipment. If it tends to move more, they have to bring in more for the next shipment. But if they're bringing exponentially more each time, then Costco's like, well, time to make some competition because obviously you're seeing it grow and grow and grow, and people still will keep buying it as they price it up. They will keep buying it. So Costco will be almost like an antibiotic for an overpriced consumer good. So it's also going to test how strong your moat is. Costco has a strict profit margin, no more than 14% on each product, and no less than, let's say, 11%. So they bake that in on everything across the board. So if you see a product in there, they're gonna be like, okay, I'm going to go to that company. If I'm Costco, I want to buy 10,000 of these units for this price. No, then I'm going to go and buy your competition out, the entire company, and then compete against you. They did that with golf equipment. Kirkland has putters, wedges, golf balls, gloves. Now, did they start a golfing company? No. What they did is they most likely bought a portion of one that is their competitors. Like they have Callaway in there. Maybe they buy um, TaylorMade. If they have an alcohol, for instance, uh, I don't personally drink it, but the vodka, Kirkland vodka, is made in a Grey Goose factory. Uh, and if I'm wrong, just throw it in the chat. But I'm probably not. Kirkland tends to just buy something and then slap their Kirkland sticker on it and then only max out their percentages, right? So if you can think about that on your small portfolio too, is like, this is the amount of profit I want to make, and I'm okay with taking it right there. That's your plan. Like, this is the amount of loss I want to take on everything, and I'm going to cut it right there. That's your plan. I'm not good at taking loss. So I should probably get better at it, but I'll hold it till it turns green again, or I will dollar cost average till that gap gets smaller. And then once it goes up, then I'll sell for profit. I'm a profit seeker on this alpha portfolio short term. Then I have a beta and theta portfolio that's for longer terms, right? Beta for 20 years, uh, theta for 50, 60 years, who knows, even longer. And then I have the Robinhood Strategies Managed portfolio for incidentals. And it's almost like a strong savings account because I know that the Robinhood Strategies team knows what they're doing more than I am. But I'm learning. Like, this is something that I want to do for the long term. And this is something I want to share with all of you for the long term. So I want to keep learning. I'm putting the hours into this. Now, unless you're going to put hours of your life into learning how the stock market functions, I don't recommend getting into this full time. You cannot just buy something, turn it around, triple it, quadruple it, 10x it, and then pull out. I wish that's not how it works. Because if that's how it works, a lot of us who study this would be far more wealthy. What we are is stable investors. We know where to take our profit. We know what our budgets are. We know what bills need to be paid. That's how I started. Found some change, had a few $100 in my savings account, and then I just started trading with money that just didn't matter. Because if you're going to invest, you'd have to sort of just kiss that money goodbye and hope it comes back worth more than you put it out there as. If you do investments like real estate, you know that very well. Houses get expensive, then you have to sell at a high sometimes. Houses get cheap, you buy one, and then you invest a little bit more and then turn it for a profit, right? House flipping is sort of that. Uh, we just have one rental property or income property, and then we have our homes, right? That's enough, right? I'm not looking to buy up a town tomorrow. What I'm looking to do is show you guys how to buy your first home. And on that subject, 7% interest is not low. And if a bank is looking to fix you towards 7%, I would say just hold off for a little while, right? Do your math. Like, even if you're not good at math, just do the math. And if it takes you a long time to do the math, at least that's a good wait time. Locally, I'm seeing local banks. I'm not going to name them, but we only have like 5, so you can jump to your own conclusions. They're pushing a lot more families in their advertising. I don't know if you've noticed this as well. I see a baby and a family going and sitting at a desk, or a baby, first birthday, and then it's a bank. And what that tells me is that these banks are now running out of people to take these loans at these prices. So after the 2008 crisis, subprime loan market crisis, banks had to increase their risk assessment for credit borrowers. So it's 750 if you don't know that. 750 or more is what your credit has to be to get a loan. Most people in Hawaii don't have that, right? Some of you do. Congratulations. You probably got a house. Some people don't. And it's only increasingly more difficult for them to get a house, which is okay. Now, the people who rent these houses to the people who don't have the right credit to buy, they tend to live out of state, right? Because the best credit tends to live outside of Hawaii. Because of that, we have people who look at most of the properties in Hawaii as income properties and as investments. And I know with my investments, I'll cut them for profit, right? So if we're seeing Hawaii having a bit of a problem selling these loans, then we're going to end up with more of these homeowners selling these properties at the high. So we're going to see a pretty quick downtrend, um, right, on the pricing of houses in Hawaii. So it may actually come down soon because people don't want to take the risk anymore. Hawaii's too expensive. It can't get any more expensive. If you go look at the stock prices on your local banks, most likely they hit a ceiling, boom, down, hit a ceiling, boom, down, hit a ceiling, boom, down. I tend to short our local economy because I know it's not doing well. I study it and I know the economy is not doing well. So I actively short it. I watch the bank go up, boom, buy a short position, and then cut out at its inside of its box. Like it's all about trying to find good trends and then going with that trend. So I'm not trying to be a contrarian. I'm not good at it. So just follow a good trend. Now let's go into looking at the overall outlook. So this week, as we can tell for now, is not going to be pretty. We're a little bit farther in, a little after 1 o'clock here in Hawaii. Let's bring up the S&P. Because if the S&P is doing a little bit better, maybe it gotta come back up for a second kind of thing. Maybe. I doubt it. We'll look down here inside of our box. Like I didn't want to be in this box. Like honestly, it's not fun being correct because I'm not correct a lot. So if I'm correct, then it's was kind of an easy thing to find. It was an easy thing to read. But here we go. No, well, that's a 4 hour. Excuse me. Let's get it on a smaller candle so we can see really what's happening in those short bursts. All right, so you can see here's the kind of buy sell lines, the volume. Excuse me. Okay. So it seems we're in the 660 range. Yeah, 6377. So the overall 24-hour markets haven't opened yet, so it's going to correct to where that is once it does. So expect your S&P 500 positions to be coming down. That's not fun, but I anticipate we're going to get some sort of pump back up for a second, and that's where you find the opportunity to get more puts and make some income as the market comes down. Don't fight this trend. It's not pretty, but it's money. And I heard somewhere along the way that money doesn't care about you, right? It's all about what you do with this money in your life. You got a $20 bill on the table, it doesn't care about you, right? You look at it, you don't care about it either, really. You think about the possibilities of that $20 bill. And now, if you put that $20 bill in the stock market, you're more likely to turn it into a $100 bill at some point in the future. The longer your outlook, the better your chances of winning are. Like time will heal your wrong answers. So right now you're wrong. 10 years from now, you're gonna be right. So it's important to just stay invested during these hard times. If this is becoming a psychological strain on some of my long-term traders, some of my friends who were just being held up by the bull market last year. If you were trading last year, it was a brilliant year. Everything was ripping, all-time highs almost every week, right? Yeah, woo! And it deludes you into thinking you're a good trader. It did to me. And then I come to find out, oh no, what happens when things go against you? Like, how good are you at catching? How good are you at turning it around? How good are you at being like, nope, sell, even at a loss? Just take this short term loss because it's going to get worse. Was I perfect at it? No. But I'm not greedy. So I took my profits and I was happy about them. So as we're bringing this episode to a close, first of all, I want to appreciate you for sticking around this long and bearing with me in my new setup. Over the next week or so, I'll probably try to really hone in this setup just so it's better for you guys. I'm streaming here during the day, so the lighting is a little bit off, so I'll get better at that too. But I really appreciate it. I'm trying to be a good Mr. Rogers of investing for you, right? It's all about staying calm, looking long term. And if your portfolio or a position in your portfolio is going down and you're getting upset about it, this is more of just a test on your overall conviction then. Which is telling me that just if you don't like it that it's coming down and you're not encouraged to go buy more, then you might have been in the wrong position in the first place. I have a couple of small positions like that. I'm like, oh, I was looking for a swing trade. And now I'm a community member. And now I got to go do all this other research to see when it'll come back, what my outlook is, when I should cut for a loss if I have to, because I know it'll take way longer to come back than it would be for me to take that small loss, but still have capital and take that capital and regain that traction in that same amount of time. For all my holders of anything in technology or software, my heart goes out to you. It's not doing well. Uh, if you were following along the markets early in the year, you knew that diversification is a big goal for this year. From institutions to banks, you're seeing huge inflows into ETFs. An ETF is a basket, just like the S&P 500. But those baskets are specialized, so you can go buy a specialized basket, energy basket, gold basket, mm, technology basket, and then these companies run those baskets for you. It's one of the better ways to diversify with a little amount of capital. If you're just getting into this and you don't know what you're doing, just find a good index fund of a basket of things that you're interested in and buy a little bit of that. They tend to do better. Don't try to learn what I do, which is options trading. I trade futures and I swing trade and short things, right? It's far more complicated the things that I do. I don't encourage it. But ETFs are by far one of the best ways to get your portfolio started on a strong foundation, a place that won't just fall out of the sky. Don't go and put your money in a brokerage like Robinhood and just expect to find the golden ticket out there. You might. I have a couple times, but because I did and I didn't know what I was doing, I also lost some of that, right? Because you find it, but you don't know how to keep it, right? That's the same thing in a lot of things in life. You get lucky with something, but luck is not work. You don't have the experience enough to keep that asset. So it's important you do your research too. It costs you no money to write down the price of a stock and then come back in a few days and look if it's the same price. Most likely it'll be a different price, and most likely it'll be lower because this might be a stock picker's market this year, but it doesn't mean that you're going to pick it on the right spot. It doesn't mean you're going to find the bottom. I haven't found the bottom at all on anything. I know I'm going to buy it and be like, okay, if it's a bottom, it's a short term bottom and it's going to rip a little bit, and I'm not going to take the profits like I should. And then all of a sudden it takes my face off. So, like you, I'm at a I'm at a stage in my learning process as well. I'm just farther along than some people might be, and I want to get you past the problems that I dealt with. So if you see this later on posthumously, please leave me some questions and I will answer them for you as accurately and concisely as I can. And if I don't have it, I'll go pull up I'll go pull up an AI so we can both learn about it. Because if you have a question that I can't answer, then that means we both have a question that should be answered, and I want to do that for us both. All right. We're just going to take a quick check if there's any overall news that popped up within the last few minutes. When futures open, more news comes in more quickly, so I'm going to try to get that out to you real fast. As of 15 minutes ago, jet fuel prices in Europe have now risen over 100% in a matter of weeks. Okay, so If you're in Europe, that means the prices of your overall travel will go up. Jet fuel is one of the main exports out of Hawaii. If you are in the fueling industry, you know that. And that's not a good export to have, a main export, when our land is great for agriculture, because then it tells me that we have to buy it at a premium and sell it at a premium. It's not like we can make this Jet A fuel here, right? So we're just premium buyers. We're not buying a seed and then selling the premium, and then somebody else can sell that premium. Coffee is a good example. Now it's not a big industry, but people grow the coffee, then they can roast the coffee, and then they can sell those bags in whole, and then companies can split those bags and sell them for another profit on top of that initial premium that they paid the coffee companies. So jet fuel price is going up, which means travel will go down. And if you live in Hawaii and have lived here long enough, you know that you got to travel here. You got to fly here. You got to fly inter island. Things have to be flown here or shipped here. That means the travelers will be less from Europe to here. That means most likely our Jet A fuel prices will go up, and most likely less people will be able to afford to travel here, which means our main economy, which is 90% tourism at this point, will be taking the biggest hit for the next few weeks or months. And if you were following the local news and how much it's costing initially to fix the problems and the damage that we had from the storm recently, it's upwards of $1 billion. And leadership only can afford 10% of it. Bigger picture wise, $1 billion is the overall GDP of Hawaii. We don't tend to make more than $1 billion a year. So Lahaina, those fires cost us billions as well. So for every billion that it costs us, that's 1 billion, or that's one more year we don't get to take any profit. That's one more year that Hawaii is now in a deficit that they're not willing to talk about. They will continue to tax, but those tax dollars are not equating to value. Like, you pay your taxes, you should feel that those taxes are creating a value for you as a taxpayer. And I don't think it has been for a long time. Us on the outlying islands, that's not Oahu, we tend to have a lot less funding from federal funds than Oahu does. And it's because of the way they do the census tracking. If we all know that Oahu has the most amount of civilians and the most amount of people who live there, so they'll get more dollar per civilian. But the other islands have actually more mass, more roads, more ground to cover. So most of the federal funds should be going to roads, municipalities, um, outreach, right, to people who in rural areas, and those islands aren't getting that funding because it's getting clustered into a big problem of Oahu's compounding. I want to go with hubris, because it seems like they're not willing to admit that 20, 30 years from now, Oahu's outlying areas will be underwater, or the coastline will be underwater, regardless of how much money we try to put into changing the environment. You cannot change the ocean. Like, you don't have to be a scientist to know that the ocean comes back for every island. All of the South Pacific is like that. Water comes up, water goes down. Now, you're anticipating it's going to go. We as humans can just reduce the water level by ourselves. It's not quite that simple. For a fun math, here's what would happen if every single human being that exists today were to go from head to toe into the ocean. Like, everybody jumped in the ocean and was all submerged. You know how high the ocean would rise? About that much, like a half inch. That's how little influence humans actually have on the planet, for good and for bad. Mother Nature will correct, like, the planet will come back to some sort of neutral. But on the short term, Hawaii needs to really pull up their boots and start moving infrastructure away from the ocean. Excuse me if that hit your ears a little bit, but we got to move infrastructure away from the ocean, and move the most expensive assets away from the ocean. Hawaii makes a lot of money off of property taxes. If you own a property, you know how much money you pay in taxes. But let's say you lived in Kukio, one of the most expensive gated communities in the state, most likely. I'm hearing 2 bedroom or 3 bedroom, 2 bath houses in Kukio paying 400,000 a year in property taxes. Does that seem insane? Like, yes, they can afford it, but the more wealthy you are, the more likely you're good with your money, and that's not a good investment when you're paying basically another apartment every year just in taxes. Is that something that you would do if you were rich? If you had all the money in the world, would you want to go and pay that much for it? No, you can just not live in that spot, or get us. You can go wherever you want. You have money. You can go wherever you want. So if we're starting to not only alienate our locals, but we're also alienating the wealthy, um, the fuel prices is going to start alienating the tourists. Where do we get our income from then? Like, Hawaii needs to make a profit. Unfortunately, that's how governments, companies, you as a consumer, that's how it works. You cannot live by taking losses all the time. That's not sustainable. Time will crush those losses and compound them. Like I said, it's the eighth wonder of the world is compounding, for good or for bad. Now, I want to end this episode on a high note. I think we're getting towards uh, some true blue de escalation. I think we're going to see some changes, and I'm optimistic about the next month or so. On a statistics standpoint, March tends to be bad. April also tends to be bad. So you look at the options flow for May, and we're seeing some bullish signals for May. So if you can just maybe just turn off the computer for a month, if it's not something you do every day like me, just don't look at it, or try to find a place to put your money that feels safe for the moment, right? All right. Ahui ho. Farewell. Please be safe. Thank you for joining me on the week to come. I will see you again sometime this week. There will be another episode of the week that was this coming Friday, 2 hours after market close, and we'll see how this week shaked out. Until then, or until my next podcast, maybe sometime this week, maybe we'll bring up some other stuff that people will find interesting. Um, Farewell, ahui ho, and I'll see you on the porch. Also, I'm gonna